One of the most useful research assets we have is not a chart, a model, or a signal feed. It is a diary. Red's comments is basically the diary of an analyst. Time-stamped thoughts, trade ideas, doubts, stress, missed opportunities, pattern recognition, and learning loops. Most market commentary starts after the move is already clean. The diary gives you the messy part. What was forming, what was uncertain, what was early, what was wrong, and what was still worth testing before the market made the explanation obvious. A broker's statement usually tells you the trade number, the size, the entry, the exit, and the P&L. That is useful accounting, but it is thin research data. A written log gives you the missing layer. Why the idea existed, what evidence was visible, what uncertainty was felt, what would have killed the thesis, and what the analyst learned afterwards. If you have time to make that log, it is gold. The idea we are studying is capital rotation. Not price went up, therefore buy. The better question is, where is capital finding the best venue for the same broad idea? At different times, that may be defensive indices, US tech, European markets, Japan, commodities, or something else. The same macro theme can express very differently depending on volatility, liquidity, currency, positioning, and what professional capital is trying to achieve. That is why a diary matters. It catches the thought while it is still half formed. Later, we can ask whether the market confirmed it, rejected it, or taught us a better version of the hypothesis. This is not look how brilliant we are. That is the wrong lesson. The useful question is, how do we leverage the process? There are other serious analysts and institutional research desks looking at the same world. If our dated hypothesis and an outside research desk later arrive at a similar conclusion, that does not prove the trade. But it is a useful, independent check. Agreement is not a signal by itself. Agreement is a reason to test harder. We took the dated diary and compared it to market history. Here is the honest claim. The diary was not perfect. No research diary is. But it did catch the broad rotation sequence in a way that is useful. Value and defensive markets mattered first. Nasdaq and US tech had their own leadership phase. Europe and Spain became important later. Then Japan became a major research candidate before the full explanation was clean. That matters. Past performance does not predict the future. More precisely, past performance is not a reliable indicator of future results, but past dated evidence still matters. It matters because it tells you whether the process was seeing real structure before the story became obvious. It also gives Ray something much better than a hand-waved lesson. It gives Ray a training object. A dated analyst thought. The market context at the time. What happened next? Whether the idea was early, late, wrong, or useful. Whether the theme was right, but the vehicle was wrong. That does not mean every call was right. It means the thought process was there, dated, and testable. That is the difference between a story and research evidence. The useful public lesson is the method. Take human observation, timestamp it, structure it, compare it to market data, build tests that can fail. Then let I help compress the work without replacing the analyst. That last part matters. A diary is not evidence just because it feels right. It becomes useful when we can turn it into questions. What exactly was the claim? When did it appear? Which market or theme was involved? What would have made it wrong? What happened after the timestamp? Did the idea beat a basic baseline, or was it just a good story? That is the difference between research and signal shopping. This is the part that matters. We are not asking I to read a diary and agree with it. That would just automate bias. The useful workflow is stricter. Start with a timestamp. At that moment, what did the analyst think was happening? Then attach the market data that came after the timestamp, not before it, after it. That is how you avoid cheating with hindsight. For each diary item, Ray can help build a research row. The timestamp of the observation, the market or theme being discussed, the direction of the hypothesis, the confidence or uncertainty in the language, the evidence the analyst was using at the time, the next available bar after the timestamp, the path after that bar, the outcome window, the failure condition, the baseline to beat. That turns a human thought into something a machine can test. The next layer is comparing data resolutions. A normal candle gives open, high, low, close, and volume. That is useful, but it is also compressed. Tick data gives the path inside the candle. So we can ask a better question. What did the candle hide? Was the bar smooth? Was it chaotic? Did price travel a long way and end near flat? Did the same candle shape contain very different internal behavior? Did the path show absorption before the close made the bar look calm? That is where information theory becomes useful. We can measure simple things like disorder, entropy, path, roughness, and how much the tick path disagrees with the finished candle. We can also test more advanced lenses like topology, copoolars, curvature style measures, and regime change features. But the name of the maths is not the edge. The edge, if there is one, is whether those measurements explain something after the timestamp that the ordinary bar did not explain. That is the test. Another example is rotation data. If the diary says capital is rotating, Ray does not just save the sentence. It can compare markets across the same window. Which market led first? Which market lagged? Which had the cleaner trend? Which had better range expansion? Which confirmed the broad theme? Which failed to participate? Which vehicle expressed the idea best? After costs, volatility, and noise. That lets us separate three very different outcomes. The theme was wrong, the theme was right, but the timing was wrong. The theme was right, but the chosen vehicle was not the best expression. That is a much richer training signal than simply saying right or wrong. We also use negative evidence. If a comment sounds confident and the market does nothing, that matters. If a candle looks dramatic, but the tick path says the move was absorbed, that matters. If a public research note later agrees with our thesis, that matters. But only as an external pressure test. Ray's job is to hold those things together. The human note, the timestamp, the market data, the estimator readings, the later outcome, and the failure label. That is what makes the diary trainable. There are useful things people can take from this without copying a trade. Most traders have statements. Fewer have research diaries. The statement tells you what happened to the account. The diary tells you what happened to the thinking that made the decision. That is the layer Ray can learn from. The first is the hypothesis card. Before the market makes the story obvious, write the idea down in a way that can be judged later. If this theme is real, what should happen? Where should it show up first? Which market should lead? Which market should lag? What would make the idea wrong? That one step changes the work. It turns a feeling into a testable claim. The second useful idea is separating the theme from the vehicle. A theme might be risk appetite is returning, or AI infrastructure is being repriced, or capital is rotating toward a cheaper market. But the tradable vehicle is a separate question. Two markets can point in the same direction, but one may offer better movement, better liquidity, cleaner exposure, lower noise, or better timing. So the question is not only, is the theme right? The question is also, where is that theme being expressed most efficiently? That is where rotation research becomes interesting. The third useful idea is that candles are compressed information. A candle close tells you where the bar ended. It does not tell you the full fight inside the bar. Inside that bar, there may have been absorption, disorder, failed selling, failed buying, acceleration, exhaustion, or a change in who was in control. That does not mean every tick matters. Most tick noise is just noise. But the research question is useful. Does the information lost by bar compression ever explain why two similar candles behave differently afterwards? That is the kind of thing Ray can help us test. The fourth useful idea is failure labeling. Most people only save their best calls. That is a terrible training set. We want the wrong calls too. We want the vague calls. We want the early calls that were right but painful. We want the ideas that sounded smart and then failed. That is how the system learns the boundary between insight and noise. This is where Ray becomes useful. Ray is not there to replace the analyst. Ray is not there to say buy this or sell that. The useful thing for viewers is watching what the AI is doing inside the research process. This is the kind of messy analyst material we train it on. Notes, mistakes, timing, charts, market context, outside research, and later outcomes. That point matters. Ray is trained on the diary as data. Not just the final trade, not just the P&L. The training material is the whole research state, the time-stamped thought, the uncertainty, the market context, the bar or tick structure, what happened afterwards, and the failure label. The human layer still matters. This is not an unsupervised machine making market claims in a vacuum. Humans bring market memory, scars, context, judgment, and skepticism. AI brings recall, structure, comparison, speed, and the ability to search for contradictions without getting bored. The useful loop is simple. Human sees something. AI structures it. Human challenges it. Data confirms, rejects, or reshapes it. Then the loop starts again. That is the part worth watching. Ray is there to help turn messy human research into structured evidence. What was said? When was it said? Which market was being discussed? What happened next? Was the idea early, late, wrong, or useful? Can the pattern be repeated without hindsight? That is the real value of AI in this workflow. Not magic, compression, memory, comparison, and pressure testing. So the point is not copy us. The point is watch the research loop. Watch how an analyst forms a hypothesis, how AI structures it, and how the evidence either improves it or breaks it. Here are the kinds of examples that are useful to show publicly. First, rotation notes. An analyst may write that capital seems to be moving from one market group to another. On its own, that is just a thought. Ray can turn that into a research object, timestamp, market, family, theme, reason for the idea, what would confirm it, what would disprove it, what happened over the next window, whether the market chosen was actually the best vehicle for the theme. That lets us ask, was the observation early, late, wrong, or useful? It also lets us ask a better question. Was the analyst directionally right, but in the wrong venue? One current research candidate for that workflow is SoftBank, not as a public signal, not with live levels, as a case study. The safe public framing is simple. It is a research opportunity, not an investment recommendation. If Japan is the rotation idea, does a proxy like SoftBank lead, lag, confirm, or mislead? Does it tell Ray something useful about the Japan AI ecosystem that the index alone does not show? That is the kind of question we can study without turning the channel into a copy trade feed. Second, chart formation notes. A candle close is only the final print. The interesting part is often how it formed. Was the move smooth or disorderly? Was the selling absorbed? Did the bar look weak while the underlying tick path was improving? Did the final candle hide a fight inside it? Those are not automatic trade signals. They are training examples for better questions. Ray can help compare the visible bar to the hidden path inside the bar, then ask whether that extra information ever mattered after the fact. For example, two bars can close in almost the same place. One may have been a clean trend bar. The other may have been a violent fight that ended flat only after absorption. To a normal candle chart, they can look similar. To tick level research, they are different objects. That difference may be useless. Or it may be one of the places where the useful information lives. We do not know until we test it. Third, outside research. If a serious research desk later arrives at a similar broad conclusion, we do not treat that as proof. We treat it as pressure. Did we see it first? Did they see something we missed? Did their evidence improve the hypothesis or expose a weak assumption? That is a useful independent check, but it still has to be tested. Fourth, failure cases. This is one of the most important parts. Ray should not only learn from the ideas that worked, it should also learn from the ideas that were early, vague, overconfident, late, or simply wrong. That is how we stop the diary becoming a shrine to hindsight. The goal is not to prove the analyst is always right. The goal is to build a research memory that gets harder to fool over time. There is a big limitation. A diary can prove that a thought existed before the move. It cannot prove by itself that the thought is a durable edge. Past performance does not predict future performance, but it still matters. It matters because it gives you a fair audit trail. Were we early? Were we late? Were we right on the theme but wrong on the vehicle? Were we just telling a good story after the fact? Those are different outcomes, and the diary lets us separate them. For that, we still need out-of-sample testing, baselines, failure cases, and a clean separation between publication and execution. That is why we label this preliminary. The bigger idea is this. Human analysts sometimes see messy, cross-market patterns before they can fully explain them. I can help preserve, structure, and test those observations. The combination is powerful, but only if we stay honest about what is evidence, what is hypothesis, and what still has to be tested. This channel is about that process. Research, education, and entertainment only. Not financial advice, not a signal service. Every idea can fail. Markets can move against any thesis. Capital is at risk. If you want more research logs like this, like and subscribe. And if you have a serious question, put it in the comments below. The best questions often become the next thing we test.